Elevance Health announced their earnings this morning, and I have a fresh set of financials to take a look at, as well as an update on how they're trying to improve their overall valuation. Now, this space, needless to say, has had a couple rough years, and at some point it will begin to recover and likely reward investors that are buying at the right time. I'll take a look at the fundamental information and also update my valuation on Elevance Health on this video. So begin with the earnings. The earnings in general look really positive to me. 12% revenue growth is very good. And one note I'll make on that is it's a 12% revenue growth while their membership remained the same roughly. It actually went down a little bit in members. So that 12% revenue increase is on price, showing that these businesses do have pricing power. That's a desirable aspect of a particular company and industry. The profitability is there for the company, and they were able to return $3.3 billion of capital to shareholders, dividends and buybacks. Now, buybacks are a really good idea for Elevance as well as other health insurance payers because their stock prices are historically at lows. So it's a really good idea for them to do that. I've taken the financials that they provided, updated my model with them, but let's take a look at other fundamental metrics for Elevance. Elevance Health is a $76.5 billion market cap company with revenues of $194 billion. Their PE is 13.9 for the current year, dropping to 11 in 2026 with a dividend of 2%. Analysts think it is discounted by about 16%. And looking at the 5-year, this stock was really working for a couple of years. And then we've had those problems within healthcare, just a lot of bad press, some higher expenses, some government changes that really made, I think, some revenues either go away or get lowered, as well as some of their expenses are going up. So with that in mind, this might be a discounted stock. We'll confirm that when we do a valuation. But this space has not been a popular space for the general investor. The general investor has been staying away from this space. Elevance is down both for the year to date and the 1 year. The financial data is pretty darn good, right? The company has been growing year after year, and it grew its most recent quarter quite nicely by 12%. For the full trailing 12 months, they're growing at 11.8%, and they're showing that they have pricing power, which is very good. The cash flows for the business look good, and they've been recovering their cash flows, getting back to a really nice free cash flow rate. Looking at their cash flows, their most recent quarter especially look good. And I think they're going to get back to those high cash flows they were producing in previous years. I'll use that cash flow history to establish what I think is going to be the right go forward cash flow rate. Overall, this industry, not a lot of high profits. It's just a volume business. You have a high number of members. You're processing health insurance claims, match them against premiums, and you're left with a profit. It's a very stable business, and the brand really is where the moat exists. The stronger your brand, the more people want to be insured by your company, more businesses and corporations want to partner with you to provide their employees insurance for healthcare purposes. One metric that is important for this industry is the benefit expense ratio, meaning you have policies out there and then you have expenses for those claims. And they're currently operating at a 91.3% benefit expense ratio. It would be better for them to get into the 80s. They are guiding that they aim to be at 90% fairly soon. That's good to see. It's an industry trying to adjust with, again, some government changes where some benefits were not supported, or maybe the reimbursement rate on Medicare and so forth has changed. So they're adjusting and they're trying to get to 90%. Looking at what analysts are thinking of Elevance, they do believe this stock is discounted by 16%. And this is an industry that I view as a stable industry. If we have a substantial sell-off, like in 2022, this industry did well, while technology and other growth-oriented industries were really struggling. So this would be a decent hedge against all these really good stocks that are appreciating currently. And that's possibly a good reason for investors to consider an Elevance Health. So this year, they're doing quite well with good growth. They're going to slow down their growth and really focus on expanding profit. Not a bad idea. I think Health insurance has kind of been under a magnifying glass, and until new opportunities open up, I think they should really stick to their core business and make it better and really expand their profits, which is a good idea. They're still going to grow single digit, but they're really going to focus on the business. I think their stock's going to rise. I don't think the PE is going to continue to drop down to 7.79 over time. I think their stock price will eventually rise. We've had a couple of good months for Elevance as well as others in the space. So we'll see if that continues after today's sell off. Elevance Health is discounted by 44%. That's a pretty good discount on what I think is a good hedge on today's market, which is um, doing fantastic for the last 3 years. It's been doing great. But at some point, we're going to have the AI bubble burst. We're going to have growth stop working. Maybe some of these businesses spent too much on AI. And when that happens and you have a really strong sell off year, Elevance Health is going to stand up tall. And they're operating the business quite well to the point where their cash flows are really valuable. Their profits are very valuable. So it's a nicely discounted stock of 44%. They can improve their expense ratio. It is a little high compared to United Health. United Health is at 89.4. Elevance is at 91.3. So they could improve that and probably pick up some more investors that are seeing that, hey, the business is improving. So that is my analysis on Elevance Health. I hope you found it interesting. Let's see how this stock trades going forward. Thanks for watching. Good luck with your investments. Thank you for watching the video. I hope you found it interesting. Would you like more access to content like this? Consider being a paid member. You get more real-time access to videos when they're published. You also get access to a Discord and many other value add benefits for investors, like access to the tools that I use when I analyze stocks. Take a look at the 4 levels that are available on the homepage of my YouTube channel. Thank you.